right, welcome to Equities on Chain. Before we get going, why don't we do some introductions? I'm Steve Alfred, Managing Editor at CoinDesk. Why don't we start down at the end with you, Xiaoxia?
Xiaoxia Zhu, President at Jupiter, the on-chain super app on Solana.
Pablo Penaloza, CEO of T7X, and we're a layer of infrastructure to help real-world assets launch on-chain.
Hi, everybody. Thanks so much for joining us late in the afternoon. My name is Nick Dukoff, Head of Institutional Growth at the Solana Foundation.
Okay, great. So things are moving, super fast in the tokenization space, even at this conference this week. So we'll go ahead and hurry up. I'd like to start by asking each of you to explain what the problem of tokenization of equities is solving. And Nick, I'll start with you.
Sure. So I'm going to flip the question and frame it more as like, what is the opportunity that tokenization is solving? If you're a US investor and you're investing in US equities, there's not much of a problem. And there is an opportunity though, but the bigger opportunity is if you're a US investor and you're looking to invest in international equities, or if you're an international investor looking to invest in US equities. There's all sorts of intermediaries and all sorts of fees if you're looking to do that type of transaction. And with tokenization, it enables democratization of access to the world's productive assets, companies all over the world, which is very exciting. There's also other benefits. You can trade outside of market hours. You can borrow more cheaply and more prevalently against those equities. And then there's a whole host of opportunities that I don't even think we've thought about that builders will innovate and create once more tokenized equities are on chain.
Okay, and Pablo, I know you've got your kind of own perspective based on your particular business model, but what issues do you think tokenization is solving from your end?
To me, tokenization is not just for the sake of tokenizing something, just not just to put it on chain, but to me it fills a specific role in capital formation. So we believe that through tokenization we can actually allow access to capital markets for small companies that perhaps at this stage are not able to access the larger capital markets, the New York Stock Exchange and so forth, but you can also create securities and provide access to a regulated offering through an on-chain issuance and reduce the cost of access to capital, and as well as provide protection both to the investor as well as to the entity raising capital. To the investor on the side of the regulatory compliance that can be built in, but to the entity raising capital, there is a level of protection that comes through the blockchain, because in a perfect world, there is a T0, basically, settlement, which means that the settlement is instantaneous. And when I sell the security to you, it goes from my wallet to your wallet directly. And that eliminates the intermediary risk, the settlement risk, the risk of the custodial. It makes it cheaper, faster, and it allows the entities to have their value of the shares preserved. In other words, I cannot short that share because I can only sell what I hold on my wallet. And from that angle, I'm protecting and preserving the value of that share, but also protecting the investor.
Okay, and Xiaoxia, I know Jupiter must have over 1 million users, millions of users?
We had 40 million unique active wallets last year and processed over $1.2 trillion of on-chain trading volume on Solana.
So can you give us, we've talked about it in the abstract, kind of what the opportunities are. Can you give us kind of like a real world example of what some of your clients are doing?
Look, I mean, we have, on-chain super app, the definition of on-chain super app, you don't just do one thing. Like we have actually now over 20 different products in all kinds of different verticals and markets that are happening on Solana. We are the #1 spot trading venue, the #1 perps trading venue, #1 prediction markets venue, launch our own stablecoin. We're the fastest growing lend and borrow protocol on Solana. And then we want to sort of continue to build out that flywheel so more and more people don't have to actually leave on chain, right? And so you can do more and more of the things you traditionally would have done in your banking app or your centralized exchange. And now you can do that really on self-custodial technology that is permissionless, globally accessible from day one. And really, we believe is a better way to kind of do finance is to do it on chain. And really building out that thesis is what motivates us. The whole like tokenization RWA topic, I would say, cuts across the different product lines, right? It's not just something that we think of in terms of just spot trading on prediction markets or lending, borrowing. The beauty of DeFi is the composability, right? Like once you have started to tokenize and represent value in the real world on chain, best example now is I have in mind is recently worked with X stocks to tokenize S&P 500, and that is just a very high quality asset that should be accessible and owned by anyone really in the world, right? It's not about arguing, do I like Bitcoin or do I like meme coin or not, right? And so tokenizing these kind of very high quality assets on chain really opens up very different possibilities, and we're just at the beginning. So today, you can buy with your stablecoin, you can swap it into tokenized S&P 500 if you want, right, on Solana, on Jupiter. And then you can start to actually use that tokenized S&P 500 as a collateral to borrow stablecoin against it at an LTV. Very low borrow rates today. And then once you have stablecoins right, against your S&P collateral, you can start to kind of put it again to work into our lend pools. This is essentially what extremely wealthy people do. In a way, they have equity holdings, they never sell it. They just pledge it as collateral and borrow against it, and then they spend the borrowed amount, right? They don't have actually pay tax on that. That's actually what's happening now on chain. And the reason why we're doing this is not because we want to make the wealthy richer, it's actually to enable that democratized access to retail users around the world who don't necessarily even have banking access, but now they can actually buy tokenized S&P 500, and I'm very much looking forward to the next continued iterations of that tokenization wave that will come to continue to bring more higher quality assets, starting from indexes, but then individual stocks, post-IPO, pre-IPO is growing very quickly, and over time, potentially also bonds, credits, right, and other asset classes.
Very cool. Ed, Nick, can you walk us through the actual mechanics? When I buy an equity token, like what legal transaction occurs that is actually backed by stock?
Yeah, so there's a few different models, and they're evolving, and innovation is happening, which is really exciting to see. I'll start with the transfer agent model because that saw a lot of activity this week. Obviously, the biggest, in my opinion, biggest news this week was Bullish acquiring Aquinity, which is the second largest transfer agent in the United States. Tom Farley, on one of the stages just yesterday, showed the world the first tokenization on Solana using Aquinity as transfer agent of Bullish shares. That's a very exciting development. Superstate has done something similar, albeit with a smaller number of stocks, Forward Industries, Galaxy, a few other names. Then you've got the SPV model, which is Ondo Global Markets and Kraken X stocks, which basically takes and creates a wrapper on top of the shares, often custodied omnibus via Alpaca, and then distributed Reg S, so to non-US persons. The kind of limitations and benefits of those models on the wrapper model, Ondo uses an RFQ model, so they quote from the market, and so trading is only 22.5. The benefit of the Ondo model is you are getting fair execution and true pricing directly from the exchanges. The benefits of Kraken X stocks is that they're 24/7. So the borrowing example that Xiaoxia was giving is you can borrow 24/7 against your collateral with X stocks, like the S&P X stocks, whereas with Ondo, the borrowing markets close of business Friday and reopen on Monday, or Sunday night maybe. But Securitize also announced a partnership with Computershare, so and Jump and Jupiter are partnering on that. So just this week now, you've got virtually the possibility of every single stock being able to be tokenized via the transfer agent model, via Computershare or Aquinity, and then you also have the Ondo and Kraken wrapper model I would also want to mention the DTCC has a no action letter from the SEC to use securities as collateral in that particular use case for the next 3 years. And Nadine Chakr, the head of DTC Digital Assets, spoke at the Solana Accelerate conference yesterday and talked about all the exciting things coming with DTCC as well. So there's a few emerging models. Each has their pros and cons. I think it'll be exciting to see what develops, but in any event, there's just a thriving ecosystem of innovation happening with tokenization, and it's just getting started.
And Xiaoxia, you've kind of got a front row seat to those models. Do you see one as emerging as the winner? Or?
I mean, it's not about that we're the platform, we're the distribution layer, right? And the beauty of on-chain is that it's permissionless, right? And I think we're really moving, I think, I'm talking to a lot of people who ask me questions about, it sounds in a way that we are like a centralized exchange, but we're like the opposite of that, right? We're really moving from a world where, people with asset issuers and users have to go to a centralized gatekeeper and ask for permission to be able to trade, to a world where code is law and it is really permission. Anyone that tokenizes assets on Solana, it automatically gets discovered, right? We write verification algorithms that make sure that the token is authentic, but that's really it. And then it's like really free market, right? It's about supply and demand. We make it available through discovery mechanisms and different UI, UX front ends to make it available to people. But ultimately in the free market, it's about, diversity of supply and different product offerings. And ultimately, I think the products with the best and most sustainable economics, as well as the best user experience, will win out. And as sort of the marketplace of that, the on-chain marketplace, we love competition and new supply, high quality supply coming in. I think the underlying trend that I care the most is that I believe like the explosive rise of Solana and the applications of Solana over the last few years is a tremendous success story. But I think we're just at the, less than 5% of where we actually need to be, right? The whole like meme coin, whatever like happened in the last 2 years was just a proof of concept, right? It just proved out that the infrastructure is performant and scalable and robust enough to handle the onboarding and execution for millions of users. But that's it, right? Where the next stage where we're going to is to really like radically improve the quality of the underlying assets that is tokenized, right? And technology is neutral. It doesn't care whether it's a meme coin or whether it's like, Anthropic and shares that everyone wants to sort of buy into. And from a technology perspective, we literally don't differentiate, right? And ultimately, I think it's the social mechanisms of the markets, right? Of like differentiating, like before they wanted meme coin, now we want, tokenized equity. Tomorrow, I don't know, like if agentic finance is coming in, agents are doing stuff, what do they prefer, right? And so I think building out the underlying infrastructure, Solana is the rail, Jupiter is the terminal on top of that rail to really allow you to discover, execute, and trade. And over time, I think it's whether it's the humans actually like, in administering the terminal or agents, that's probably also like a very interesting perspective. But nevertheless, whatever happens, high quality assets being issued on chain is absolutely a game changer. And I think Nick and the foundation, we are like working very closely and passionately on that topic. Yeah.
And we've been talking about public equities, but I'd also mention that there's also a burgeoning private equities tokenization effort happening as well. So Republic has tokenized this week Animoca brands stock on Solana. So that's private stock, pre-IPO equity of Animoca that you can now buy on the Solana blockchain. And similarly, SpaceX and Anthropic and many other names are available for trading on Jupiter and other front ends on Solana as well.
Yeah.
Okay, cool. Pablo, I think about like the October 10th crypto crash where you had very thin trading conditions, a little bit of news hit, and everything just kind of collapsed. How do you think about bootstrapping liquidity, particularly with some small issuers, in those kind of thin conditions?
I agree with Xiaoxia. One of the keys is to bring on-chain quality. And a key component of that quality has to do with compliance. to be able to have the transfer agent methodology of issuing securities on chain, because at the end of the day, if you are issuing a real-world asset, you are dealing with a security. And that requires, in the US, a public registration with the SEC. And to the majority of the users, that gives them the confidence that you can rely on the information provided, the disclosures and so forth that come with the public registration. That's how we bring more players into the playground. Until we have that level of compliance built into the smart contracts and into the platforms itself, then you're still going to have skeptical people looking from the sidelines and saying, I'm not sure. But once you feel comfortable, and that's what happened with the New York Stock Exchange and NASDAQ and so forth, people feel comfortable. I can go buy something there, and it's going to be a quality product. It may or may not, go through the roof, but it's a solid investment. The business fundamentals are there. You have something that can be traced back to value and utility versus some of the stuff that have been issued in over the last 5-6 years. There's a lot of meme stuff that really has no concrete value underneath it. And I believe that to unlock that liquidity, you need more players into the playfield, and you need a sense of trust to be developed. And compliance is one of the key points to make that happen.
So I disagree. I think that is a paternalistic view. So I actually think there's way more valuable assets that are not publicly registered than are. Some of the best businesses in the world are private businesses that are not, do not have public disclosures. And just because a business does have a public registration statement and makes public disclosures doesn't make it a good business. In fact, I'd say meme coins trading as meme coins trading has gone down, meme stock trading has gone up. And so I think there's a lot of names out there that are kind of garbage, but people like to trade it because there's vol. But regardless, I don't think it's your or my or anyone here's kind of position to kind of say this company or that company is better or worse because it's public or not. The best arbiter is obviously voting with your dollars, right? So the thing you do get to do, the thing I get to do, the thing that Xiaoxia gets to do, the thing that you get to do, is we get to vote with our dollars, right? And that's buying shares. So if I want to buy a private stock, I should be able to. But right now, because of the accredited investor threshold, there are millions of Americans who are quite sophisticated, but because of the archaic laws of the Securities and Exchange Commission, they're not allowed to buy these private companies that are great. And then outside of the US, there's tons of great companies all over the world that US investors don't have access to, and vice versa. And so I think one of the real promises of tokenization is to democratize access to the great productive assets of the world, and also democratize access to capital to the great businesses of the world from investors all over.
Correct. And I don't necessarily mean to say that unless you're publicly traded and you have an SEC registration, you're not worth trading. I mean, the blockchain universe needs to be able to allow that access to the smaller players, like you were mentioning. We at T7X work mainly with companies that are going to be raising capital under $100 million, usually in the $75 million to $50 million range. And
is that Reg A?
Yes, through Reg A. And those entities can meet that bar if somebody can walk them through the process. And that provides a level of comfort that allows you to access not only the small institutional investor or the sophisticated investor, but it also gives you access to reach a retirement fund, an IRA, because now you're dealing with a registered security. And to be able to bring all that money that is sitting on the sidelines, maybe earning almost nothing, to the blockchain and to participate in a way that the individual retiree feels comfortable because there's a registration associated with that investment, I think it will bring an entire new player to this market. This market mostly tailors to the younger people that are more comfortable with technology, but the money is sitting on the older generation's retirement account. And that's what makes BlackRock and those guys, the big gorilla in the room. But if we can democratize that access to that smaller investment, that is how we can make a difference. And that's kind of what I was referring to. I'm not trying to isolate the blockchain to only big players. I'm just trying to say, if we can create a level of comfort, that individual investment can come in and make this much, much larger pie.
100%. That I agree with. I mean, one of the great things we're seeing with this administration is a willingness to innovate. The prior administration had quite a negative view on tokenization. This administration has a very favorable view. First of all, they say not everything is a security, which is true. And then second of all, I think there is a great deal of interest in making registration, whether it's Reg A, Reg CF, S1, easier for companies to list and access capital from the world. For example, right now, public companies are required to issue quarterly filings to update their prospectus. There's talk about that being semi-annual. And I think that's the type of innovation that you're also talking about to kind of reduce the bar, allow more companies to access public markets, and hopefully everything will be tokenized.
Absolutely.
And just moving on from that, I was thinking about the Drift protocol hack recently, which really threw DeFi for a loop. It was like $300 million hack or something.
The Aave hack was bigger.
Right. So we're talking about putting trillions of dollars of value on chain. Xiaoxia, how do you think about talking to somebody, trying to talk to somebody to put their entire portfolio into tokens rather than stocks, given possible security?
Yeah. Look, security is paramount, right? There's no way around that. We're extremely paranoid, even before any of these hacks, right? Like, hacks have always existed, whether it's on DeFi or centralized exchanges or banks or, any type of, aggregation of value. It somehow tries to encrypt itself, and there's hackers trying to decrypt it, right? And so, like, it's not native to DeFi that there are hackers trying to get your money. And so we got to build better protection defense mechanism and protection mechanism. Now, the challenge is formidable, right? Especially now with Mythos on the rise, and folks at Solana and Jupiter would take it extremely seriously, right? I think it's one of the great challenges of our time in our industry. But I believe in human ingenuity and innovation. We've proven time and time again that we were able to make the industry more resilient, find ways to kind of protect against attacks. And I believe also in this case, we'll find, human ingenuity will find a way. For our users, luckily we, despite the size and scale we've had, we've never been hacked. We try to hack ourselves all the time, right? We have a lot of very smart on-chain engineers. But I think, there's like obviously the more basic things that you simply have to do, like how to protect from social engineering and best practices like time locks and off-chain signing and all this kind of stuff that we can improve on. I think the bigger threat, we have to, as an industry, find ways how to like systematically probably just increase the level of standards across all of DeFi. Because I really want, I don't know the exact statistics, but I'm sure someone can find out, but like, I don't think the percentage-wise, the value of hacks that happen on DeFi is any larger than centralized exchanges or even like TradFi and banks. The same, by the way, for like money laundering, right? Like it's actually way smaller than what happens in TradFi. And it's just the fact that we're still like an emerging, quite flashy industry that people, like to point fingers. But yeah, fully agreed, right? That new system comes new challenges, and we have to find new solutions for these kind of new industries.
Yeah, I'd also note that tokenized equities and many of the tokenized real-world assets are not bearer instruments. So stablecoins, for example, are bearer instruments. If you lose them, they're gone. Tokenized equities can be reissued just as if they were on another ledger. So for example, in the Drift hack that you mentioned, Circle allowed the attacker to move money via CCIP, whereas Ondo froze the USDY which is a tokenized treasury instrument, and stop the attacker from moving that tokenized real world asset.
Right. Okay.
Yeah.
Good. So let's talk about the future. Like probably 5 years from now, what percentage of U.S. equities do you think touches the blockchain in some fashion?
What percentage? It's hard to say, but I think the pie will grow. Not only we will have the majority of the currently issued securities move to some sort of on-chain trading, we will also have an entire new host of new entities and new issues of new securities join the playing field. We will have an entire new market that is nearly untouched. There is a very, very small market, for example, to trade a Reg A or a Reg D, a private placement, where individuals currently receive a certificate of share, a certificate of stock, and they have to go around and find out somebody will want to give them liquidity. That is no longer the case with the blockchain technology. You can create a secondary market for those, and that will incredibly speed up not only the capital formation, the rate of capital formation, but also the liquidity in the market. I expect that 5 years from now, the total tokenized portfolio will far surpass the existing market capitalization of what is currently trading on all the public markets. And I would say something regarding Xiaoxia's comment regarding security. Security, when it comes to that, the model is what Nick was talking about. It's a transfer agent. There's a registered SEC-regulated gatekeeper that determines who owns which security at any point in time. And as long as you have a transfer agent involved, there's no way that securities can disappear without trace.
Okay.
And that is key. I think that is a new evolution that it was just announced. Everybody picked up on it, and now many, many people are moving into it. And that's what T7X has, a transfer agent within its ecosystem, and we work that way.
Okay. Xiaoxia, do you think there are any kind of traditional giants that are at risk from the tokenization boom, or do you expect them to just kind of go all in themselves or start buying up crypto native firms? Or?
Interesting. And before Jupiter, I was working for years at KKR, one of the largest private investment firms in the world. And at their time, when private equity rose 40, 50 years ago, they were the renegades, right? The rebels, and with milk and so on, and junk bonds. I think we're like in a similar place. Probably we are the rebels right now. The big question that we asked ourselves back at KKR is like, what's the end state? If you underwrite like a 5 to 10 year investment horizon, what's the end state of the market, right? Is it going to be basically, these new upstarts basically completely take over the existing rails? Is it going to be they will just get beaten down by the existing players, or will it be some sort of like buyout, right? Like M&A, you just buy into it. I think reality is somewhere in between, right? Like the more dormant and slower to adopt, institutions, they may, just be risk averse at the beginning, and if they are just dormant for too long, they will get disrupted, whether by faster adopting institutions or faster acting startups like Jupiter. But of course, there's like formidable moats that a lot of these giants have built over decades, if not centuries, right? And so they may be hard to disrupt, but I think the beauty of this new technology is like it's something fundamentally new, right? Like it's very hard, I think, for a 100-year-old company to kind of build something and make it immediately available, globally accessible to millions of users, right? It's that possibility just never existed before, and just building a culture and organization around this new possibility, I think, requires something completely different. So that's sort of my hope, that there is still a reason for the kind of like fast moving, smaller companies with smaller resources to kind of continue to exist. But inevitably you will have to kind of work together, right? Like these kind of press releases, Solana was a startup 5 years ago, it had no transaction volume, and now, you have press releases with Jump and Bullish and, the biggest transfer agent in the world. And I think this is just a signal of, more to come, and it will not be black or white either way. I think it will be hopefully a beautiful, beautiful coexistence and co-repetition. Yeah.
Great. I think that's all the time we have. So thank you to my panelists. Thank you guys for watching.